Remember that the only way that you can graduate from this course is completing your assignments, these assignments. So make sure that you are um, on top of all of that, right? We're not gonna be able to graduate you unless we have all the assignments that are all the testing and all the assignments that are required. So perfect. Let's go through it, and let's talk about negative numbers. Yesterday we talked about positive numbers. We had a refund. I explained to you how that refund was read. I explained to you how this number that you see up there, how that number came about. And today I'm going to explain to you how this number works and where do we get the results and how do we get those results. So let's without further ado, let's do that, and let me go ahead and print the W or the form 1040. Go ahead and print that, and then I'm going to come down here to printing just the 1040 pages, take away the client copy watermark, and print it. And there you go. You'll see it in just a second. There we go. We have a 2016 return for a customer, Jose de Jesus Aguirre. This is an ITIN customer, so I'm going to be making some changes as we go through the class. So as I said before, you always want to have the customer check the important information, the personal information. Make sure, Mr. Customer, make sure that this information is correct. And and once they say okay, you continue to explain the process. This customer is single, so there we have the first mistake, right? This customer is not single. This customer is head of household. So you can see that the customer has a dependent, so there's a head of household, right? Situation going on here. So why don't we fix that, and then we come back and you'll see how. And you'll see what happens, right? So let's go ahead and fix this. There we go. Let's go ahead and fix this and come down to a head of household situation here. And I'm going to run the error check one more time. Make sure that everything's great. Make sure that you're doing this as you're completing the returns, that you are running the error check. Once you think you're done, once you believe that you are done, go ahead and run the error check on top. Let it run. Remember, an error is something you have to fix. A warning is just something that you got to pay attention to, but not necessarily fix. So, and if you have any questions, remember the chat system's here to help you. So, all right, cool. Let's go back and print. Make sure you finish your work before you. Whenever you come to the chat system and you ask a question, be specific. For instance, I need help with customer. And give them the social security number or the ITIN number, and tell them what you need. In the interest of time, tell them what you need, because as they are helping you, they're also helping 100 or 200 other people, right? Especially in tax season, we have close to 1,500 preparers. So we want to give you the best service we can, but we also ask from you that you do you also do your part, right? Which is make sure that you study, but you complete all of this testing and all of this exercises, so that way when we get to tax season, you are fully ready, right? So all right, so let's go back. And let's talk about Mr. Jose de Jesus Aguirre. Make sure that this is correct. He's a head of household. He has a dependent, which means that he's going to have two exemptions, right? Two exemptions. Easily, I can see, very easy. I can see in here. Let me change this. Someone actually asked me to do this yesterday or last night when in the PM class. I think it's better. You can see it better now. So again, Jose de Jesus, and then you have your filing status there. So let's focus on income now. And let's talk about income. And you can quickly see that the customer has a Schedule C. It has a Schedule C or a CEZ because he has business income, right? Line 12. There's no other. If you look at the other lines, there's no other. There's no other line with income. This is only a Schedule C business income, business or loss, Schedule C or CEZ. So we're gonna go through the process and see what's the numbers tells us. I do see here there is on line 27. On line 27, I do see an adjustment to income, and that is deductible part of self-employment tax. There's a deductible part that you're gonna see here. So because he is a self-employed, the IRS is not going to charge income. It's not going to charge him taxes on all 15,000. It's going to charge him taxes on this, on the 13,940. That's where the IRS is going to calculate taxes. So if you ever see, you're going to see these a lot for, this is part of the tax law, the tax provision. You're going to see this adjustment a lot with 1099ers. They're going to have a reduction in income on line 27. So whenever the customer asks you what that is, you need to be able to respond and say, oh, well, that is the deductible part of self-employed. It's part of your tax provision. You get that adjustment because you are self-employed. The IRS is not going to charge you income taxes on all of the income. Is going to charge taxes only on a portion of the income, right? And that's why you're making that adjustment there of 1,060. And you know, so let's continue. Let's move on to the next part. What I want you to do is I want you to be very, and then we're going to talk about self-employed tax here in a minute. But I want you to have your eyes open, right, to these deductions or to these adjustments. All right, so instead of 15,000, now the customer has $13,940 in income. So $13,940 in income, right? So there's no 13,000, there's no 15,000 where the customer is going to pay taxes. He's going to pay taxes on 13,940. And remember, this customer is going to pay two kinds of taxes, right? So he's going to pay normal tax, and then he's going to pay self-employed tax. And there's no way of escaping self-employed tax. I want you to pay attention to this, and I want you to write this down. Self-employed tax is going to be part of the return, and if you have non-refundable credits, the non-refundable credits are not going to affect the self-employed tax. So let me say one more time. Even if you have refundable credits, it's not going to decrease your self-employed tax, okay? Because self-employed tax, if you remember, self-employed tax is Social Security and Medicare, right? That's what you're doing, Social Security and Medicare. So even if you are an employee, even if you have non-refundable credits, your self-employed tax is not going to go down. It's still going to get there. It's still going to be there, and I'll show you why here in a minute. All right, so you have $13,940, right? And out of the $13,000, you're going to have your standard deduction of $9,300, which brings your income to $4,640. And then you have your exemptions, two exemptions. So you have 8,100 exemptions, which brings your income to zero. You have a zero taxable income, okay? Zero taxable income, right? So no tax. Write that down with me. No regular tax. That's what that means. No regular tax. All right? So no regular tax. You have no regular tax. As you can see right there, no regular tax. Okay, perfect. So that's a good thing, right? And so if you had any check this out. Since you don't have any regular tax, if you had any credits right here, they would also be zero. So for instance, if you try to apply the 8863, it would be zero. If you try to apply the 2441, it will be zero. If you try to apply anything else, the only thing you will see here is zero because your 47 is zero. Remember that non-refundables are meant to take away the tax that you have here, right? To reduce the tax that you have in line 47. But since you have zero, you're not going to see any non-refundables. All right. So this amount right here is going to be zero, right? So whenever 47, 0, 55 is going to be zero as well, because you have nothing to go against. You have nothing to go against. Can everybody hear me? Melanie, are you able to hear me? Just doing a sound check. Just want to make sure that everyone's able to hear me. Okay. So, so you want to make sure that whenever you're going through the line 1040, you understand these numbers and you're saying, okay, I am able to explain to my customer why he's getting a refund, why he's not getting a refund. So the customer is going to ask you, hey, but what about I have a dependent child tax credit. What happened to my child tax credit? I have one dependent. Yes, Mr. Customer, you do have one dependent, but you already have zero taxable income, right? You already have zero taxes to pay, so the non-refundable credits are not going to be applied when you have zeros. All right. So forget about line 48 to 54 when you have zeros, because it doesn't work that way, right? So line 47 is zero. Line 55 non-refundables are going to be zero as well. So let's move on, and the next part, it's going to be, and you'll see there, this is very shocking to the customer sometimes, because look, here you go. Now you have $2,120 self-employed tax. Okay, $2,221. And remember, I was telling you, there's no reduction on that. Your non-refundable credits are not going to help you reduce the self-employed tax. So where did the self-employed tax come from? It came from the fact that you are a Schedule C. That's where it came from. You have the Schedule C. You haven't paid Social Security, so you have an idea right here. And what I'm going to do is I'm going to go back, and I'm going to print this for you on a more extended form. So let me print that for you, and let me print all forms so you can see the self-employed tax. All right, so the customer has a Schedule C. Remember that when we were doing the 1040, the customer has a Schedule C. There's $15,000. There's no expenses. This in reality should have been a Schedule CEZ, right? Schedule CEZ, not a Schedule C. All right. So this, in reality, this should have been a Schedule C because there's zero expenses, right? There's really no expenses. So there's no point of doing a long form like this. But either way, whether you do the Schedule CEC or you do the Schedule C, you're going to have to pay self-employed tax. There's no way of escaping that. So if we look for the self-employed tax, there you go, self-employment tax. You'll have the form at the bottom, and you'll see here really quickly what happens. Check it out. The customer came in with $15,000. The IRS is only going to use $13,853 for tax purposes. So $13,000 $853. So 13,853 times the 15.3% gives you, if you multiply this number right here by 15.3%, it's going to give you this number right here. Okay, so as a self-employee, you are required to pay 15.3% of your income. So 15.3% of your income, you're going to be paying that right there. So it doesn't matter what your income is, that 15.3 is going to get calculated. So I'm going to give you an example. I'm going to give you an example here, and I'm going to go back to the return, and I'm going to change this customer's income, and I'm going to say I'm going to say 20,000. And I want you to see how that number just goes up, right? It went up to 29.98. If I go to the self-employed tax form, check it out. He now owes 28.26, right? That's a 15.3% right there. And the rest of it, the other part is and we will see it here when we go to line 2. Now the customer has $119 of taxable income, and he also has self-employment tax of $28.26. Again, there's no way of escaping this. Let me go back into the return. So I guess the one thing that you need to understand when we talk about this specific example, the one thing you need to understand is there's no way of escaping self-employment tax. No way. You have to pay it. There's no credits that will go against the self-employed tax. There's no non-refundable credits. The only way that you can escape paying self-employed tax is going to be this. Let me show you this. So we have already determined that we have no self-employed credits, right? No non-refundable credits, right? Non-refundable credits equals 0 for this return because there's none, right? There's no non-refundable credits. Okay, so now the customer owes, between his taxable income and his self-employed tax, the customer owes $29.45. That's his tax bill, $29.45, right? So the only way that the customer could actually receive money back, the only way it would be from if the customer had credits right here. So for instance, let's say that the customer had $1,000 here of EIC credit, right? It's $1,000, and he also has, let's say that the customer has additional tax credit of $500, okay? And let's also say that the customer has what else? Let's say that he has a 8863, and he also gets $500 there, right? Okay. So there, the area customer has $2,000, right? $2,000. So what's going to happen is that the IRS is going to say, it's going to add this up, and it's going to say, okay, you have total payments of $2,000. This plus this. Sorry. This plus this plus this, right? So $2,000 right there. You have $2,000 in income, in payments. So the IRS is going to say this minus this equals $945. That's what you owe me, $945, right? $945. But I want to show you this. This is something new for you. I want you to see that right there, those $53 on line 79. I want you to take a look at that. It's called an estimated tax penalty. anyone who has a Schedule C gets at the end of the year gets treated as a small business, right? So see, so you're supposed to report your income taxes quarterly. Um, so if you don't report your income taxes quarterly, the IRS is going to penalize you. So this person is getting penalized $53. Let me go back and explain this so it's less confusing to you. Um, and you got to pay attention to all of the lines, right? Because if you look, this line doesn't equate or doesn't look like this line, right? And that's because you have $53 here as a $53 here as a penalty. Okay, anybody who has a Schedule C, it's gonna be required to file taxes quarterly, but most people don't do it, so the IRS is going to add a small penalty if you don't do it. It's gonna add a small penalty. So there you go. I want to make sure that you understand this. So let's run by it one more time real quickly, and let's say, and I'm gonna go back and change the income back to 15,000 just to give you a very actually, let's leave it like that. I think it's a very good example. Let's leave it like that. It's a much better example that way. And there you have it. You have a Form 1040. Let's focus on part number 2 of Form 1040. Mr. Customer, your income, your adjusted gross income is $18,587, but you have a reduction of $9,300 standard deduction, which leaves your income at $9,287. You also have exemptions, 2 exemptions, which equals $8,100. So that leaves your taxable income at $1,187. In those 1187, the IRS calculates taxes of $119, right? So far, this customer owes the IRS $119. But let's add the non-refundable credits that you have. Oh, you have 0. Okay, so you're not going to get any refundable credits. So you still have calculated taxes of $119. Those are personal taxes. But since you are also a self-employee, you have self-employed tax. And because of your income, your self-employed tax is $2,826. All right. When we add those up, you have $2,945. Okay. When you add those up down here, that's how much money you owe. And since all of this is 0, all of that is 0, and you also have a penalty for not filing quarterly, you actually owe the IRS $2,998. So $2,998. So very, very simple. How you can come up with those numbers. I'm gonna make some changes here. We're gonna make our first pause of the class. I'm gonna make some changes to the return. We're gonna come back and we're gonna talk about how this looks with the changes. So let's make our first break for the class. Okay, so we are back. Just give me a yes or an okay if you can hear me. We are back to the class, and you're going to see a few changes that I've made in the return now, and I'm going to point them out to you so you can see them. I changed the customer's social security. He originally had an ITIN, but now he has a social security. So that, of course, that made him qualify for some credits. This is just for training purposes, okay? Don't go out there changing the social securities, and you know, that's not what I'm trying to show you here. It's this is for training purposes only, okay? So make sure that you are that you're paying attention to this part of the class, because it's going to be really important that you understand this part. So let me just give me 1 second. Just want to make sure that you can hear. There we go. All right, cool. So you have this customer now with now a different amount. This is $547. Mr. Customer, you owe $547. And then the customer is going to say, well, how? I have a dependent. I'm legal. I have credits and all of this and that, right? Yes, you do. So let's go and see why is it that you still owe money. So what we're going to do is we're going to go through the 1040 again, and we're going to understand why is it that this customer still owes money. But let me say this: I also up the I also increased the income for the example. So here you go, Mr. Customer. You are reporting income of $25,000. Reporting income of $25,000 right there. Your taxable, your deductible part of that income is $1,766. So that's the part that the IRS is not going to count. They're not going to give you, they're not going to tax you on that. So your actual taxable income is going to be $23,34, right? So that's going to be the actual taxable income. And then we'll start down here, and let me make this a little bigger for you, so that way, there we go. That way you can see it. All right, so Mr. Customer, your adjusted gross income is $23,000, right? Well, because the customer's wondering, where are my credits? Where are my credits, right? I have credits. That should have taken care of all my taxes. And this is so you can understand that you did your job right. The numbers are right there, right? So you make 23,000, or you make 25, but the IRS is adjusting your income down to 23,234. It's also giving you a standard deduction, right? Standard deduction of $9,300. So that brings your income down to $13,934. Minus your exemptions. You have two exemptions, you and your kid, of so that's $8,100. So that leaves your taxable income at $5,834. So that's about 10%. If you look at it, that's about 10% of his income. That's what the customer's paying in taxes. 10% of the taxable income. That's what the IRS wants. Okay. So check this out. Since the customer has taxes that he has to pay, and he also has a child tax credit, which is non-refundable, he's going to see a portion of it over here, right? The non-refundable kicks in, the non-refundable kicks in and takes care of his tax. So in reality, he owes nothing, right? So at this point, he owns nothing. There you go. Look at line 56, 0. He owes nothing, because this line 55 took care of line 47. Line 55, which is your non-refundable credits, took care of the line 47, which is your calculated tax. Okay, so that brings it to 0. But remember, you are self-employed. You have that situation where, guess what? You have to pay tax. You have to pay Social Security and Medicare, right? Because that's what that is. So you have a self-employment tax of $3,532. $3,532, right? That's your self-employment tax. You can't escape that. You cannot escape that. You can't get rid of it. It's gonna be there. You have to pay Social Security and Medicare. That's what that is, Social Security and Medicare. You're paying your portion and you're also paying the employer's portion. Since you're a self-employee, you have to pay both. So I think you remember that part of the class we had 2 weeks ago when we talked about self-employment tax, 15.3% of the income. All right, let's move forward. Now we know that the customer owes he owes $35.32, right? $3,532 in income in self-employed tax. He owes that. There you go. But the customer can have that reduced by simply applying the rest of the payments, right? So what are the rest of the payments? Well, Mr. Customer has earned income credit right here. Line 66, the customer qualified for earned income credit based on his income, based on his dependents, based on all of this. He qualifies for $2,568 of dependent or of earned income credit. And out of the refundable part of the child tax credit, so the additional tax credit, he's getting $417. So that is based on his income, he's getting $417 of taxable income, right? I'm sorry, of child tax credit. And the one thing that I always like to point, the one thing that I always like to point out to people, right? If you look at this. Let me go back and let me scroll this up a little bit more for you. People are like, oh, well, I didn't get my $1,000. Where are my $1,000 per kid? Check it out. Child tax credit. This is non-refundable, right? $583. Additional child tax credit. The refundable part. $417. When you add those up. Add them up, you have $1,000, okay? There's your $1,000. There's your $1,000, right? But part of it is not going to be refundable. Part of it is going to be refundable. That it's based on your income, okay? So you have your child tax credit right there, and you have your additional tax credit. Because the customer's like, well, where's my $1,000? They told me $1,000. You got $1,000, but part of it is not refundable. Part of it is going to go against your taxes, so you're not don't expect that you're going to receive those $1,000, all in cash, right? So I hope you've paid attention to that, because that's really important. That's what you can tell your customer. There's your $1,000. $1,000 counts in two parts: non-refundable credits and refundable credits. Sometimes you're not going to qualify for the non-refundable or for the refundable part. Right? Sometimes, based on your income, you're not going to qualify for it. In this case, you are qualifying. So, what we do here, the next step is to say, well, Mr. Customer, you have a self-employed tax debt. You owe the IRS self-employed tax of $3,532, but you have some credits here, right? And those credits are going to be credited to this number. So, when you say $3,532 minus $2,985, right? You are left with $547. And this is the amount you owe. Check this out. There's no penalty. There's no penalty on that. There's no penalty because the customer has dependents and the customer has a Social Security. There's no penalty on that. Okay, so very simple how you can explain this to a customer. You can explain the numbers and you want to understand if you did things right. Go back to the numbers and look at the numbers. If you're like, well, did I do it right? Is that number right? Remember that when you're a preparer, right? So what I told you yesterday. in my case, right? No one tells me if it's right. I don't have the luxury of going to the chat system and ask them if it's right. Or I can't, when I'm testing with the IRS, when I'm doing my enroll agent test with the IRS, I can't ask anybody if it's right or wrong. I have to be sure because the numbers make sense, right? Because when I see this number right here, I know exactly why he has that number there. I know exactly why. When I see this number here, I know exactly why. So if I can explain the numbers, I know that the numbers are right, that the calculations are right, and that I know why the customer owes money. Because I want you to look at this. I want you to look at this. And I'm going to get out of this return. Here we go. Take a look at this. At a simple look, at a simple view, you can say, well, this customer should have gotten a refund, right? Because look, he's legal, he has a social security, head of household, dependents, right? He has a dependent, has a very small dependent. Look, it's a 7-year-old dependent, so he should have gotten a refund, right? He only made $25,000. That's not a lot of money for 2 people, right? Yeah, but now that you know the law, you understand that since he's reporting a 1099 miscellaneous, he's going to have to report that under a Schedule C or a Schedule CEC, right? You know that already. Either he's going to report it on a Schedule C, or he's going to have to report it under a Schedule CEC, okay? And what that means is that whatever money he is reporting is going to be subject to self-employment tax, right? You already know that. Self-employment tax, look, it's right here. Self-employment tax, which that equals 15.3% of your income, right? So you know that already, 15.3% of your income. So that means that this person is gonna have to pay more taxes than someone else. Let me show you this, and then we'll be done with this example. Let me show you this one more. I'm going to go ahead and remove the Schedule C. Let me show you this. I'm going to report $25,000. So, but I'm going to remove the Schedule C. So let me go ahead and remove that. Schedule C is gone. Your 1099 is gone as well. So you have 0 right there. So I'm going to add a W2. Okay. I'm going to add a W2. Let me add that real quickly. And I'm going to say $25,000. Check it out, $25,000. There you go. And I'm also going to say that the customer did not pay any taxes. I'm going to say 0. No taxes paid. 0. 0 taxes paid. Okay? He didn't pay any income taxes. Look, check it out. Check that out. It's the same amount of money that I had in the Schedule C. It's the same amount of money. 0 income taxes paid. But and now he's getting a refund. Why? Why is he getting a refund? You know why? Because self-employed tax is no longer applied. Self-employed tax is no longer there. That's why he's getting a refund, because he's now an employee. And I want to be clear with this. You cannot switch a customer who brings a 1099. You cannot report it on a W2. You know that's illegal. You cannot do that. What I'm telling you is the difference. If he had a W2, even if he paid 0 taxes, even if he pays 0 income taxes, he will still pay. He'll still receive a refund at the end of the year, because he is not paying self-employed tax. Okay, so that's something that I told you from the get-go. There are some people who receive a 1099 but are in reality are employees. So you should have, if you're an employee, you should get a W2, because if you don't get a W2 at the end of the year, what you are doing as an employee, by receiving a 1099, you're paying your employers, you're paying the employer's portion of the taxes. Okay, so that's something that you also have to be on the lookout for your customers and say, hey, Mr. Customer, are you an employee or are you the business owner? Are you a contractor, right? Because if you're an employee, even if you put expenses, you're still gonna have to pay self-employed tax, right? So if you're an employee, you should be getting a W-2. If you are a contractor, you should be getting a 1099. And if you are the owner of that business, you should report some expenses, right? But I want to give you the difference, right? And again, I am not telling you that you can change forms. If your customer brings you a W-2, you use a W-2. If your customer brings you a 1099, you use a 1099. We cannot create W-2s on the system just because, right? I'm just giving you this example right here because I think it's extremely important for everybody to understand that. Perfect. So what you have done is you've seen how we go through a Form 1040 with positive numbers and with negative numbers, and you've learned the reasons why customers will have a perfect customer will have dependents and will have credits and still end up paying money. Usually it's because they have to pay self-employed tax or as you can see in this case, this customer with a W-2 pays 0 income taxes throughout the year and still get the refund, and all of those refunds are credits. Here's a Richard Johnson, and let's see if we can find. I can actually look him up here and just say Richard, and all the Richards are going to come up. So I'm going to go to Richard Johnson right here. Open this scenario. Pay attention to this. This is what we should have done throughout the return. I'm going to say this one more time. We don't care what this amount is. This is not the point of the exercise, right? That is not the point of the exercise. The point of the exercise is to see if you follow the process correctly, right? And it says here that Mr. Johnson has multiple W-2s. It says here that he has interest income. He also has healthcare coverage, education credits, it's student loan interest, and he also wants to report dependent care expenses. So let's see. Let me read the rest of it. Richard Johnson, he's married and also has dependents. Okay. And as part of the additional information, it says that all three receive insurance through the employer. All right, so there's no Form 1095. They all have insurance through their employer, so they have full insurance, full health insurance. Karen attended college, and she's paid $150 for textbooks and tuitions, right? Her tuitions, right? Richard has a student loan with interest of $400, and then Christopher went to daycare, and they paid $1,540 for daycare. So I'm going to check all that. That's what I'm going to do. I'm going to go one by one and check and see what is it that so number one, there's multiple W-2s, right? So let me go back and check. I want to see where's the info that the customer here gave me. Here's one W-2, two W-2s. There's a 1099 interest, and that's it, right? That's all I have so far. Okay, that's all I have so far. So there we go. So customers married, filing jointly. That's perfect. Cashier, all of that's good, right? Apparently part-time student. So according to what the customer told me, let's see, Richard pays $400 in student loan interest, but he's not in college anymore, so he's not a student anymore, right? So I'm going to say here no to Richard because he is not a student anymore. She's a student. She as you can see, the customer said on the that she attended college, right? She wants to see if she's eligible for education credit or deduction for $150, right? And I'll tell you this, for $150, I wouldn't even worry. I mean, it's $150. There's nothing that's going to really be a factor there. So let me go back to the return and see. Here's the student information, and I'm going to go to 8863 page 2, right? And I'm going to say Karen went to school. That's a social security number, and the qualified expenses are $150. Nothing's going to happen there. I would say in this case, no, Mr. Customer. There's no. It's $150. If I go to the credits, you know, you need a minimum at least $4,000 for the education credit, for the American Opportunity Credit, and you need at least $2,000, right, for the lifetime learning credit to actually have some effect. But if you like, you know, we can report it, right? There's no you know, if you want to do the work, you can report it, and I'll show you here. Let's say that there's no form. Most of the institutions, there's no form, so more likely you're not going to be able to report this because there's no form. All right, so I'm going to say no, I'm not going to report that because it's not going to have any effect. Okay, so it's not going to have any effect. So I've already determined that this customer cannot claim that because it's only $150. There's no form, so I'm going to say no. Look, and as I say no, you can see that nothing's changing, right? If you're keeping track of that number, which you shouldn't, nothing's changing. Okay. So there we go. Here's the rest of it. All good. Looks good. Now let's go to the next form, right? Let's see. The customer has a dependent, Christopher Johnson, 4 years old, 12 months in the house, dependent. The other credits at the bottom. Let me focus on that right there. The other credits at the bottom. Other credits. Will you be claiming a dependent care expense for this dependent? I'm going to say yes. Will you be claiming education expenses for this dependent? I'm going to say no because the dependent is only 4 years old, so there's no education expense that I can claim. All right. So that is that. So now I can come to the form 2441, which is the child care expenses, and I see that they gave me all of the information that I need. Okay, let me go back to the return, and you'll see they gave me all the information that I need. Look, they gave me the name, Brightside Daycare. They also gave me the address. They gave me the EIN number, and they gave me the amount. So I have all of that stuff. Good. I can put it in the system right there. I paid this daycare $1,540, and Christopher Johnson, the dependent, went to daycare, and we paid $1,540 for him. So on the very top, you're going to say who you paid it to, and then down here you're going to say who was the dependent who received the care and how much of it you paid. So let's see. Based on income, I see that the customer will qualify for a $354 non-refundable credit. $354 non-refundable credit. You see that? It's going to show up on your line 49 of 1040. Non-refundable credit. So you are getting a credit, but it's not cash. Cool. So that works. I'm excited about that. And then we're going to move down to the other form. The customers. So let me just go in order, right? The customer says he has a 1098T. So he does have a 1098T. I just haven't seen it yet, right? So he has a 1098T. He has a 1099 int, and he has 2 W-2s. So I want to go see those forms. Okay, I want to see those forms. So let's go for the W-2s first. Here are the W-2s. Here you go. You have 2 W-2s right there, 1 and 2. So make sure that the numbers are correct. $29,641. $29,641. And then $3,011. So $3,011. Everything else matches. Yep, everything else matches. Same with the second W-2, $87.95. Okay, second W-2, $87.95, and then $463 in taxes. $463 in taxes right there. Remember, it rounds up to the nearest dollar. Perfect. So that's great. And then the customer says he has a 1098 int, and it's right there. Check it out. 1098 int. Okay, well, let me go see. As I learned in class, 1098 int is reported on the Schedule B. So there's my Schedule B. There's my Schedule B, but this is reported in the wrong place. This is wrong. Okay, write that down. This is wrong. Okay, this is not right. Your Schedule B is reported right here, or your 1099 int is reported here. See that? It says right there, reported here. Okay, make that note, please. So I'm going to make that change. SunTrust Bank was the payer. Okay, amount received $146. Federal withheld 0, and I'm going to change that here. What's the difference? The difference is that up here you're reporting sales of mortgages. It's a different thing. Okay, it's a different thing. So remember, your 1099 miscellaneous, your 1099 ints go down here. Just read, read, read. All right. So we fixed that. The number didn't change. We just fixed the placement of the form. And you're probably saying, well, what does it matter? Well, it does matter, because then you don't want the IRS doing an audit on you, because they're trying to see, you know, they're trying to find what mortgage you sold, and in reality, it wasn't a mortgage. It was it was this right here, right? It was a 1099 int. All right, let's go back to the customer. Also said he has a 1098, right? There you go, 1098. Karen Johnson has a 1098. So check it out. Check it out. Karen Johnson, in the when we were doing the interview, Karen Johnson didn't say anything about college, about having that form. Do you see that? He didn't say anything about it. This is a great example. You have to look at it. You have to look at the documents and say, "Oh, Miss Karen, you have a 1098 form, right? You can actually qualify for more than just more than just the $150 in textbooks. We can put the $150 there, but we're gonna have to add them both up. So let's do that. Let's go back to the 8863. Well, first we need to go back to the main info and say that she was a student, right? So let's do that. Student, part-time, Form 8863. And now let's go into the Form 8863, page 2. All right, Form 8863, page 2, and let's go ahead and have Karen as the. And let me show you this. She has $150 there as a textbook, and let's just assume, for the example, let's assume that she also has the receipts. All right, she gave me the receipts. I can see $150. So she has $150 plus she also has the 1098T right there. So $2,100 plus 150, that is going to be $2,250. Okay. Name of the institution: University of Alabama, U of A. ID number 321794185. Address is 1 Crimson Circle. This is located in 35487. All right, I'm gonna go quickly on this because I know you know how to do this. And now we got to determine, right? Now we have to determine American Opportunity Credit or not. So who is the person who can answer those questions for you is the customer. The customer is the only person who can answer the questions for you. But Mr. Customer, have you ever claimed the American Opportunity Credit before? No, because this is the first time I go to school. This is the first year, right? This is the first year that I'm reporting school. Okay, so you have not claimed it. Were you enrolled in halftime? Yes. At least halftime? Yes. You can see that refund just went up. Refund just went up. Did the student complete at least 4 years of post-secondary? No, not yet. I just finished my first year. And were you convicted of any felony or possession or distribution? No, I wasn't. Awesome. Check it out. My refund just went up by $400. See that? $400. A little bit over $400. Give me a yes or an okay if you saw that. Look, the refund went up. Even though we're not looking for numbers right now, we're not looking for numbers, that we're not focused on numbers, I want you to see that if you don't do the forms correctly, if you don't follow the process correctly, you can make a mistake, right? And I just fixed a mistake on one of the returns because I read the package, right? I asked the customer, I got the forms, and I looked at all the forms, and as I'm working, I went through the process, and I said, wait a minute, there is a form in here. There is this person is attending college. She has $150 of tuition of books expenses, and she also has the $2,100 of tuition expenses. So let's go ahead and add those up and let's put it in the system, right? So this is where the whole and I'm gonna tell you this. Let me tell you this. This is where the whole idea of well, don't go there because they don't give you a lot over there, or go there because they give you more over there. That's where the whole idea comes up, right? Because someone gives you more than the other person. Because I gave someone more than the other person. No, I didn't give you more. I gave you the right amount. The other person was giving you a lower amount because they didn't know very well. That's the difference. There's no magic that I did. There's no magic. I just know the law better. I know what to look for. I know the process is better. That's the difference. That's why I was able to give you more, because I know better. But I didn't do anything outside of the law, right? I didn't give you more. I gave you what you should have gotten before, right? I gave you what you shouldn't in reality gotten. So let's go to the 1040 and let's take a look real quickly, and then we're done. We're going to be done, and I'll tell you what we're going to do after that. So let's look at the 1040. And I'm going to go directly to 1040 page 2. This is going to look just a little bit different because this is a simple form. So actually, let me go back and change that to a 1040, a normal 1040, just for the purposes of this example. All right, there we go. So check it out. This one's packed with examples, right? This one has a lot of stuff. So here we go. You already understand. Here's your taxable income. Here's your calculated tax, but you also have a bunch of credits. You have your child tax non-refundable credit of $354, right? You also have education credit of $450. You also have a child tax credit, or I'm sorry, this was your dependent care credit, and this is your child tax credit right here, right? So when you add those three up, they add up to $1,383. So that minus that equals 0, right? So you owe 0, 0, right? So that's very cool, right? Your non-refundables took care of your calculated tax. So let's get to the refund part. All right, so you have 34, that's how much taxes you paid. You paid $3,474, right? And you're getting that back. The IRS is saying, here, you can have that back. Awesome. So you also have $1,000 of earned income credit, right? $1,002, and an additional, check it out, an additional income tax credit. So let me show you that again. 579 plus 421 equals $1,000. So I'm going to show you that one more time so you can see what I'm talking about. Here's your child tax credit non-refundable, right? Plus your do that one more time. So here's your child tax credit non-refundable plus your refundable additional tax credit, right? When you add those up, it gives you what? It gives you $1,000, right? So don't let the customer think that all $1,000 are refundable, right? There's a maximum of $1,000, and a portion of that is non-refundable, and the other portion it's refundable if you qualify. So when you add all those three, you get a refund of $4,897. But guess what? It would have been different if I wouldn't have gotten back and fixed those $450. That's what I have to fix. That's what I just went in there and added. And you know what? If you're focused on the number, if you're only focused on the number, you're going to lose. You're not going to do this right. Focus on the process. The process tells me that I need to read. The process tells me that I need to pay attention to what the customer is telling me. The process tells me that I need to make sure that I have all the forms, that I went through all the forms. You need to do what I just did, right? You need to go through this, make sure that all of this is completed. And whenever you are with the customer, with a real customer, you're going to say, okay, Mr. Customer, tell me the story, but give me the paper because I need the paper. The paper is going to help me get to the real number. Okay, the paper is going to help me understand what are the forms that I need. So go through this process. Listen to the customer. Listen to that customer's story. Collect the paperwork, and then the paperwork will tell you what forms you need. And once you have filled out all the forms, once you have no more paper in your hands, that means that you can go back and review your 1040. And if the numbers that you put in there are correct, then the numbers that you're coming up with are also correct. So it's a very simple process.